I'm a huge fan of generating as much cash flow as possible, yet I also recognize that there are investors out there that just don't feel comfortable writing options themselves, selling covered calls or cash secured puts. To that end, if you want to generate more cash flow than owning traditional dividend stocks, you have to look at covered call ETFs and structured ETFs that sell covered calls. In this video, I compared all of the top 13 covered call or high yield ETFs out there, including investments like QYLD, JEPI, JEPQ, and even some investments I have not talked about on this channel at all. We'll look at which of these investments generated the most cash flow, which investments did the best with respect to portfolio balance, and I'll also identify for you how much money you would need invested in each one of these ETFs in order to generate $50,000 a year. What's up, you guys? Welcome back to the Average Joe Investor channel. As a reminder, this spreadsheet and all of the other spreadsheets I create on the channel, including the monthly dividend stock spreadsheet, access to all of my portfolio strategies and the trades I make in my own portfolio, and access to the Discord community are all available by joining the Patreon community. If you're interested, check out the link down in the description below. All right, so here are the 13 covered call or high yield dividend ETFs that we compared. First off, from Global X, we had a few, QYLD, XYLD, and RYLD, which track the NASDAQ 100, the S&P 500, and the Russell 2000, and all right at the money covered calls. Then we have QYLG, XYLG, RYLG, and one we have not talked about, TYLG, all from Global X here. They're a hybrid covered call investment that only utilizes covered calls on 50% of the portfolio. These investments track the underlying index, the NASDAQ 100, S&P 500, Russell 2000, and the information technology sector. Then we have DIVO, the Amplify Enhanced Dividend Income ETF, DIVO. We have the Invesco S&P 500 Buy Right ETF, PBP, the Nationwide NASDAQ 100 Risk Managed Income ETF, or NUSI. Then we have JEPI and JEPQ from JP Morgan, which track a large cap index similar to the S&P 500 and the NASDAQ 100. And then finally, another investment we've not talked about, the iShares 20-plus year Treasury Bond Buy Right Strategy ETF, TLTW. Now, what's interesting that we see here is if we look, we can sort this first off by the yield, and you'll notice that there's quite a bit of a variation here in yields. Top yield here goes to TLTW at 17.87%. Then we've got below that RYLD, then QYLD and XYLD and JEPQ all above 10%. JEPI right behind it, 9.11. And the outlier here certainly is PBP. Now, I did include it because it's a buy right ETF. We'll see how it stacks up with respect to both portfolio balance and income generated to see how it really, if it's even worth looking at compared to these others. Then we've got a lot of the covered call and growth ETFs, which are the hybrid between capital appreciation and cash flow, all in the range of around 5 to 4%. Okay, so here's the scenario we looked at. We looked at a lump sum investment at the beginning of 2023. The goal here was to look at which of these investments performed the best for the year. So we did a lump sum investment of $50,000 at the beginning of the period. We reinvested all dividends during this year, and we did not make any additional contributions. So from that perspective, let's take a look at which of these investments had the most dividend income. Top income for this $50,000 investment by far was TLTW at $7,484.24. Below that, second place was QYLD at $62.23. Then JEPQ at $59.46. RYLD and XYLD also above $5,000 for the year. And by far the worst investment here from an income perspective was PBP at $18.31.49. Here's how the investments panned out with respect to portfolio balance. The top portfolio balance was number one, TYLG, or the Global X Information Technology Covered Call and Growth ETF. That's a mouthful. 71,163. So you started with 50,000, you ended with $71,000. Second place was QYLG at 69,248. Third place was JEPQ at 68,139. NUSI at 65,514. And then QYLD at 61,303. The reality here is, as you can see, all of the NASDAQ 100 investments performed better because the NASDAQ 100 had more growth in their index compared to the others. And since these covered call and growth ETFs only leverage 50% of their assets for covered calls, that's why we see these portfolio balances much higher than the others. All of the investments were essentially flat or up for the year. RYLD and TLTW were just a hair underneath the initial investment of $50,000. What was interesting here is this PBP investment here, the Invesco S&P 500 500 buy right ETF. It has a small yield, so very little cash flow, but also did not perform very well with respect to overall portfolio balance at only $55,000. Now we're going to take a look at the graphs here, but stick around because we're going to take a look here in just a second at of all of these investments, how much would you need to invest in each one in order to generate $50,000 in income. So stick around for that. Let's look at the portfolio results based on these graphs here. First off, we've got the portfolio balance here, tracking throughout the year what the overall value was of each of these investments. And we can see here, by far worst performer here was in light blue, TLTW, which was for the most part down below most of the time here, dropped below near the end of the year. We also had by far and away the top two investments throughout the entire year in white and in gold here, QYLG and TYLG. All right, assets needed to earn $50,000. The investment that required the fewest amount of dollars to generate $50,000 was the iShares 20 plus year treasury bond, or TLTW. You only need $334,000 to generate $50,000. Then we had a few in the 400s. We had QYLD and JEPQ requiring $401,000, $420,000. RYLD and XYLD each also required less than $500,000 at $458 and $489. Then we have JEPI at $600,000, NUSI at $609, TYLG at $738, QYLG at $755, XYLG at $871, RYLG at $900,000, and then Devo required $1.1 million, and PBP required $1.36 million. Now, one thing I want to remind you about is, this is just 1 year, and we would definitely want to look further back. Some of the investments didn't have much more than a year history, so just be aware of that. We definitely don't want to make decisions just based off of 1 year's returns. And of course, past performance does not necessarily translate to future returns. Some of these investments did well in 2023 and did worse in 2023. Doesn't mean they're going to do well in 2024. But if you're looking at trying to maximize cash flow, okay, that's the goal, and you're not as concerned about potential erosion of your capital, then the best investment from this list based on the 2023 results would be TLTW. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many comments as possible on the day I post a new video. That's all I got for you guys. Have a great rest of your day, and thanks for watching.